Welcome to Tax Implications of COVID-19 Tax Collection in the Time of COVID-19, sponsored by the ABA Taxation Section. Moderating the program today is Christine Spidel. Christine directs the Federal Tax Clinic. In the clinic, she teaches students to practice law by representing needy members of Villanova's neighboring communities in federal tax disputes. Christine, you may proceed with the program.
Thank you. Good afternoon and welcome, everyone. As mentioned, I'm the Federal Tax Clinic Director at Villanova Law School. I will briefly introduce the rest of today's panel. This is the second in a series of webinars sponsored by the ABA Tax Section in response to the COVID-19 emergency. Previous webinars are available for free on our website at the link on the last slide. So now I'd like to introduce our panel. We have joining me on the program, Larry Santacandro, Keith Fogg, Bridget Roberts, and Nancy Ryan. Larry is with McCarter & English, LLP in Newark, New Jersey. He focuses his practice on federal and state tax controversies, including audits, administrative appeals, collection matters, summons proceedings, and litigation in federal and state courts. Keith Fogg is a clinical professor of law at Harvard Law School, where he directs the Federal Tax Clinic. Nancy Ryan is the director of the Low Income Tax Clinic at Legal Services of Northern Virginia in Fairfax, Virginia. And Bridget Roberts is the Deputy National Taxpayer Advocate with the IRS Taxpayer Advocate Service. In this role, she helps the service's mission of helping taxpayers resolve their problems with the IRS. So thank you very much to our panelists, and particularly to Bridget Roberts for being here representing the Taxpayer Advocate Service. So we are now ready to begin taking questions in the chat box. We will try to answer some questions as we go through the program, and as was mentioned, we will also have a Q&A portion at the end of the presentation. I want to direct your attention to the supplemental materials, which are available for download, and you may also download the slides. So today's webinar, we will go through first some general practice points for practitioners with active collection cases before the service. Then we will discuss enforced collection activity, next collection alternatives, and then finally collection due process and collection proceedings before the United States Tax Court. As you can see on the slide, there have been a mountain of developments since the coronavirus erupted in the United States. We are not going to go through all of these in detail, but I list them for you, and we expect additional guidance to be issued very shortly. So certainly watch the IRS coronavirus page and your email. So preliminary representation matters. Before we get into some of the nitty-gritty, I'd like to ask Bridget Roberts to give us the lay of the land. For practitioners with collection cases before the service, what can we expect? What correspondence is being answered or opened or returned, and what telephone lines that practitioners currently use, and fax lines for that matter, what is currently available to practitioners and taxpayers and what is not?
Thanks, Christine. So just to be clear, I'm here on behalf of Taxpayer Advocate Service, so I can't speak for the IRS, but I can tell you sort of from my understanding what's happening within the IRS right now. So I guess I just want to start it off by saying that, I know everyone is struggling with trying to figure out how to get in touch with the IRS to resolve certain issues. But I do want to say at the outset that I think the IRS is doing an incredible job trying to be responsive and balancing the needs of employees' health and safety and prioritizing their most critical work. I think we've seen that a lot in what they're trying to do with the People First initiative. But there are just certain realities that the IRS is trying to deal with. And while some of us, like in TAS, were easily able to make our employees telework ready very quickly, and our work is portable and could be packed up and taken home, the same doesn't go for the IRS. They had huge numbers of employees who don't have laptops, so couldn't easily transition to working from home, or they do the type of work that can't just be packed up and taken home, nor would you want them to take that type of information home. So for now, the IRS phone lines continue to be down, except for the international line. My understanding is that ACS has been working really hard to get their people telework ready, and more of them are coming online. So ACS should either be taking calls now or is going to start taking them and ramp up capacity as more of their individuals get laptops and become telework ready. For the 1040 lines, those continue to be down for now. Again, the IRS has been working to procure thousands of laptops, tens of thousands of laptops for its employees and get those ready to ship directly to employees and make them eligible to telework. So they're looking at when they can start to open up some of those lines. I don't know exactly when that's going to be happening, or what other lines like the balance due lines they are going to be able to open. I know they're still working on that, and again, it's all dependent on their ability to get the necessary technology to employees, because these employees have never had to or been able to work from home before. The campuses all continue to be closed, which is where the vast majority of correspondence comes from and is sent to. I know the IRS is working to identify which critical notices still need to be sent out, understanding that they have a very limited capacity and ability to send people into the buildings in the interest of social distancing. So they're trying to identify which notices need to still go out and which notices they can hold on. So again, some notices will still go out, most will not. And we are working in TAS with the IRS to try to figure out what happens when the IRS reopens. How will they identify which taxpayers received which notices and which taxpayers didn't receive certain notices, and how will we sort of pick up where we left off at the point this all started. So I will say, as a practitioner, keep, if you know where your taxpayer is in the stream of things, keep track of what notices you think you should have received but didn't, in case an issue arises later. If you're sending mail to the IRS, generally mail is being held at the IRS or by the post office. However, there are some instances, especially in smaller posts of duties, where mail is being returned to taxpayers as undeliverable. So because the building itself is closed. So again, if that happens, keep those envelopes to prove that you mailed that information to the IRS timely. I believe fax numbers are still working. Most IRS employees have EE-fax set up, so faxes can go directly to employees' emails. I have not heard that faxes are shut down. But again, they're sort of struggling, like we all are, to figure out what work can be done remotely and how to get those employees set up. But I think for now, that's sort of where things stand.
Thanks very much, Bridget. We had one quick question that came in on that. I know during the shutdown, the IRS was going in to open up and process checks when payments were being mailed in. You may not know the answer to this, but we had a question about whether mailed-in payments are being processed.
I don't know, because of the difficulties they're having with getting mail. So I don't know if the mailed-in payments are necessarily being processed right now. They might be being held with the rest of the mail.
This is Nancy. This is anecdotal. I did speak to someone who was working remotely who said that the payments are still being processed to the best of their ability, as long as there's no health risk, but payments are still going through.
I think Bridget gave us really great advice. If in the case that we're not sure mail, including payments, are being processed, it's important to make sure we keep a copy, maybe keep the USPS tracking receipt to be able to prove that it was timely sent when the IRS eventually reopens. So thank you very much, Bridget, for going through that. Now I'm going to turn it over to Larry and Keith. And the first subject we're going to talk about is transcripts.
Thanks, Christine. This is Larry Senecandro speaking. before we talk, we devoted a significant portion of our presentation to relief provisions that are recently made available. But before we talked about those relief provisions, we really wanted to spend a few minutes talking about how COVID is affecting practitioners' first interactions with the IRS and what to do about it. Most of us have normal rules of engagement when we deal with the IRS. Most typically, at the beginning of an engagement, we will file a Form 2848. We'll request account, wage and income, and tax return transcripts. We'll usually do that multiple times throughout the course of representation. And for some of our files, we might even request information from the IRS under the Freedom of Information Act or under Section 7602. COVID is obviously changing the way we approach the intake process. And as Bridget alluded to, you can't file Forms 2848 for new clients because the CAF units in Memphis, Philly, and Ogden, Utah are all closed. As a result, you can't obtain transcripts to services for new clients. And you can't call priority practitioner services because the IRS shut down PPS effective April 1. So the IRS is running a skeleton crew. We know that. And that kind of begs the question of how do you interact with the IRS when you have to represent a taxpayer and get information from the IRS in order to do your job. We want to first, before we switch over to talking about transcripts, I think it's important that we spend just a brief period of time talking about 2848s. Because as it relates to filing Form 2848s, IRS faxes are providing busy signals, okay? So from what we understand, no one at the IRS is receiving faxes of new 2848s. So we would suggest you not even waste your time trying. You'll still need clients to sign those Form 2848s, and we'll talk about kind of some of the electronic signature provisions that have made available so you can interact with the IRS. But you're going to have to get that 2848. Don't focus on getting it to a CAF center. Focus on getting it to the person with whom at the IRS you're going to be interacting. As it relates to transcripts, your strategy for obtaining transcripts is really going to vary based on whether you're dealing with the taxpayer who already has someone assigned to the case or whether you're dealing with a new client. For existing clients, Bridget noted who is working and who is not working. So for existing cases, you're going to work with revenue officers, counsel attorneys, appeals officers, and other IRS employees who are already assigned to the taxpayer's case. That should be pretty straightforward. For new cases or existing cases which are not being worked or people are not being responsive to at the IRS, Bridget's going to discuss in more detail how she would suggest that people get in touch with TAS. But the important thing to note, I think, is that you should make use of TAS to the greatest extent possible. I'll note that TAS is maintaining, and Bridget can speak more to it, but is maintaining its normal criteria for accepting cases. So a taxpayer typically is going to need to show either an economic burden, a systemic burden, or a public policy preference exists. And I will note that taxpayers under Section 7803 have the right to be informed, okay, and they have the right to quality service from the IRS. And to the extent that the taxpayers are not receiving that, either from existing cases or due to a complete failure in the systemic process, in my opinion, TAS should be accepting those cases under public policy grounds. So I would push it with your advocates if they push back on you, and try and get your case assigned to an advocate. Keith, I've heard a lot of people talk about workarounds for getting information from the IRS, leveraging personal relationships and things like that. Do you just want to spend some time talking about what practitioners should know in that regard?
Yes, Larry. I would say that if you're working with somebody at the IRS on a case, that person, if they're responsive to you, if they are working, to be able to get you the transcripts that you need for that case. But if no one is assigned to the case that you're seeking transcripts on, but you happen to be friends with somebody at the IRS, you have to be really careful to not call on that friendship to try to get that person to get you the transcripts because of the privacy rules at the IRS and the rules regarding unauthorized disclosure. So just because somebody is working and could pull a transcript potentially, if it's not their case, they face getting fired if they pull a transcript for you as a favor. So don't put pressure on the person who's not assigned to your case to try to work your case, because that can create a lot of problems for them.
That's great. If we can go on to the next slide, I think another mechanism through getting information from the IRS would be through a Freedom of Information Act request. Certainly, most FOIA disclosure specialists will not produce transcripts in response to a FOIA request, but nevertheless, you can probably get equivalent information by making a request under the Freedom of Information Act. I think you're going to face a number of challenges as disclosure specialists are working, but they're working remotely, and those disclosure specialists don't necessarily have access to paper administrative files. So as a result, you really need to be attentive to incomplete responses if you are making FOIA requests. I think you also need to be very strategic about how you're making your FOIA requests. Right? First, you'll submit your FOIA request through fax or through the FOIA portal at www.foia.gov. It's also important, I think, to be mindful about what you're asking for and how it is kept. It's going to be easier, I think, to get documents electronically from the IRS than it is to be in paper form, at least in the short term. So what you might consider doing, normally you would do kind of an all-encompassing Freedom of Information Act request, and you would request all documents, right, written or electronic, related to a number of various items. And what you might consider doing in this situation is bifurcating your FOIA request to one related to documents kept electronically, and then doing an entirely separate FOIA request for documents kept in paper form. The theory being that the electronic information should be produced more easily than the information kept in paper form. If we go on to the next slide, I think that covers FOIAs. Keith, unless there's anything you want to add about FOIAs?
No, other than to say that, I mean, I think for many of your FOIA requests, it's going to take a long, long time to get it. I mean, even before this, it was kind of a slow process, but now it's going to be an extremely slow process.
Yeah, that's a great point. And I mean, there are administrative and judicial remedies available in response to delayed FOIAs. I think you should expect similar issues there in terms of delays in the administrative process and the judicial process. With respect to face-to-face conferences and taxpayer assistance visits, on March 25th, the IRS announced the suspension of all in-person meetings, and on April 1st, the IRS discontinued all face-to-face conferences. All right, so some of us prefer face-to-face conferences, and we want to suggest a workaround for you all. It's important we keep in mind that Section 7521 creates a potential workaround to being denied a face-to-face conference. Section 7521 allows taxpayers to make an audio recording of any interview with the IRS. And pursuant to a tax court case by the name of Keene, those interviews that are respected by Section 7521 include collection due process hearings. All right, so IRS procedures internally will require an audio recording to be made in person so that the face-to-face hearing can be achieved. Okay, by making the request under Section 7521, the IRS, if it's following its own internal protocols, should only allow a taxpayer to audio record in person. So that may provide a potential workaround for the denial of face-to-face conferences. Keith, anything you want to add on face-to-face conferences?
Well, I mean, when you do want the face-to-face conference, so you are by necessity going to be delayed quite considerably until the IRS is back up and running. So if you have some desire to move quickly, you're going to have a conference that takes place over the phone. And I don't, in my practice, I don't have that many face-to-face conferences because of the clients I have and the issues that we have. But in any case, with a lot of documents, it's going to be very difficult to be effective if you're not face-to-face. So I think it's just going to slow down a lot of people who need that face-to-face conference. And I haven't seen the IRS say anything about changing the rules to allow an audio recording in this setting in a non-face-to-face conference. Right.
And I think the slowdown process is a really good point. I mean, some collection clients prefer the slowdown process, but I think more importantly, a lot of taxpayers' situations and circumstances are going to change as a result of COVID. And by allowing additional time rather than forcing an easy case through the system, as appeals officers working remotely might be inclined to do, by forcing the face-to-face conference and delaying the process, you might allow your clients time to kind of see where things shake out and present appropriate collection alternatives based on where they're going to be over the term of the collection statute, which is really the purpose of a collection alternative.
It may depend too. Larry, I was just going to say, Might depend too on whether you have a lien or a levy case. So taxpayers are most interested in moving quickly when they're trying to get a lien withdrawn. So in those cases, they may be willing to forego the face-to-face in order to get a quick conference and hope that their lien will be withdrawn. We'll circle back around later to whether and how the IRS is actually going to withdraw a lien, but that would be the instance, I think, where you'd really want speed.
Yeah, that's a great point. And I think in terms of just one other note, the People First Initiative, which we'll talk about in detail, advises that taxpayers may be given conferences not only by telephone but also by video. So we'll see how that's going to work out. I don't think we yet have details on how the IRS is going to do that, but I would expect that guidance to be forthcoming. And the last kind of preliminary intake issue we want to discuss before getting to the meat of collection is the submission of documents. So if we can switch to the next slide. COVID obviously is fundamentally changing the way in which the IRS receives documents and communicates with taxpayer representatives. It's important we all know that effective March 27th through July 15th, the IRS will accept images of signatures and digital signatures on documents that relate to the determination or the collection of any tax liability. Also, between March 27th and July 15th, IRS employees may accept documents via email and transmit documents electronically through secured messaging systems. There's a number of specific documents that the IRS has recognized that it will receive, either electronic signatures or digital images. Those documents include statute of limitation on assessment or collection extensions, waivers on statutory notices of deficiency and consents to assessment, closing agreements, and any other statement or form that needs the signature of a taxpayer and is customarily received by the IRS in a tax collection case, like, for example, a case-specific power of attorney. So this, I think, is a welcome addition, as taxpayers and their reps aren't necessarily able to meet in person and face-to-face. This is a way to allow the collection process to proceed notwithstanding. Next slide for a second. In order to avail yourself of the ability to transmit documents electronically to the IRS, representatives are going to need to include in the enclosure document a statement effectively stating that the attached document includes the taxpayer's valid signature and the taxpayer intends to transmit the document to the IRS. Keith, was there anything else you wanted to add on preliminary intake matters?
I think I would just say on this last slide, and you kind of alluded to it, that maybe the one good thing that'll come out of this is that we'll get some new procedures that'll make things easier even after the virus, and this would be one.
Yeah, right now all of these procedures are temporary. It remains to be seen whether the IRS will adopt them as permanent provisions. Hopefully it does. I think some of them are good.
This is a pilot program.
I think kind of right, exactly. I think one thing that was clear throughout the intake process is that a significant component of representing your client before the IRS is going to be relying significantly on TAS. So we wanted to hand the presentation over to Bridget, who's going to talk a little bit more about what reps should know when they interface with TAS.
Thanks, Larry. So like I said at the beginning, TAS worked very quickly when all of this started to make all of our employees telework eligible. We were very fortunate. They all have laptops. Their work can be done for the most part from home. So our employees are all working from home. We are not obviously doing face-to-face interactions with taxpayers. Our centralized intake line is shut down along with all the other IRS lines, but we are working remotely. Our case acceptance criteria at this point haven't changed. And because our centralized phone line is closed, the best way to contact us is by calling your local office or sending them a fax. We don't have access to mail that you might be sending us. Again, because of the issues surrounding the mail in all of the offices, at this point, we are not getting our mail. Because we are the only people who are actually really still answering the phone, as you can imagine, we have been swamped. So just to put it out there, our response times are going to be significantly delayed for a number of reasons. Our calls have exploded. Our local offices are getting, on average, about 100 calls a day. So with 77 offices, you're looking at upwards of 38,000 calls a week. And our staff is small and they can do a lot, but that's a lot even for them. And what's happening with the IRS, their staffing issues impact TAS. And I think a lot of people sometimes forget that TAS can only work cases when there is someone on the IRS side who can respond to our ORs and take the actions that we are requesting. TAS itself doesn't have the authority to, release a lien or, do a lot of the stuff that, resolve an audit, do things that a lot of people on this call need to have done for their taxpayers. So if there's no one on the IRS side for us to talk to, there is a limit to what TAS can do. So we are working very hard with the IRS to try to figure out how we can move these cases forward, but our response time is going to be delayed. And you add on top of that our employees are dealing with the same child care, family care issues that everyone else is. So they're working from home, but their hours might be a little more flexible than you would traditionally see from us because we're trying to be responsive to our employees' needs. So with all of the campuses closed, that has created some additional difficulty for us. We can't assist with OBRs at this time because there is no one in the IRS that we can work with on those with all the campuses closed. We can't work on amended returns because those need to be mailed and they're not being processed right now and put onto the system. We're still working, income verification cases, and we are working closely with the IRS, with W&I, and with SB to identify contact people in their parts of the organization who we can work with to handle our most egregious cases. But because the IRS isn't fully staffed to the way it normally is, even when we have a contact person for liens or levies, we can't work with them the way that we normally do. We're not sending our cases to an entire unit of individuals. We're sending them to one or two people. So we are working to figure out how we can sort of triage our cases to identify the most egregious ones that need to be put to the top of the pile, and working those, and then sort of trying to slowly work through them. But again, as the number of cases we are getting continues to increase, and as everyone is, realizing that we are the only ones who's answering the phone, we're going to ultimately get further behind, and there's not a whole lot we can do. Our employees are working as quickly as they can, but there's only so much that they can do. We are working with the IRS on the economic impact payment team and developing procedures for what we're going to be able to do with the IRS when we reopen. I will say that TAS won't be answering calls or returning calls related to the economic impact payments just because we don't have the capacity to do that. And at this point, those aren't TAS cases. And we are working with SB and W&I to develop a priority process for our cases once the IRS fully reopens to try to get those sort of to the top of the list. Because again, resuming regular work operations is going to be a huge lift for not only us, but for the IRS and everyone as a whole. This goes beyond sort of what we saw during last year's shutdown. It's kind of a new reality for us. And the IRS has been really great at working with us, but again, there's only so much that we can do. So I will say that if there are ideas for things that you all are seeing that we're not addressing, we have the Systemic Advocacy Management System, SAMS, which is still active, and our employees are still working those issues. So you can go on to the Taxpayer Advocate website and you can submit them that way if there are issues that you think we need to be looking at.
Great. Thank you very much, Bridget. So that really...
Oh, and actually I saw...
Oh, go ahead.
Oh, I was just going to say, I saw a question from Fran about can TAS get account transcripts. So we can get account transcripts when they're related to an open TAS case, but we're not sort of serving as a backup to the IRS with just call us and we'll send you a transcript.
Right. It sounds like you definitely don't have the capacity to serve in that function.
Yes.
And along those lines, I just want to emphasize what I think others have said, and we also got a comment on this from an audience member that practitioners really should be working their existing IRS contacts if you have somebody who's already been assigned to your case, an appeals officer, a settlement officer, an OIC examiner, if at all possible, just because TAS is so inundated with calls right now. But we very much appreciate you continuing to triage and try to work with the IRS on how to protect the most vulnerable taxpayers and make sure that those issues are being resolved as quickly as they can be. So with that, we are going to move on and talk about enforced collection activities. We're getting so many calls about the economic impact payment, but also the other segment of taxpayers that's really anxious are folks who already have an IRS debt. And thankfully, the IRS issued some helpful guidance. The People First Initiative was announced on March 25th, 2020. And the bottom line is that generally most IRS collection activities are on hold through July 15th. So no new liens and levies should be issued, with some certain exceptions with high income non-filers assigned to field revenue officers. So the IRS guidance, I think we will continue to see movement on this, and I encourage everybody to keep checking the IRS coronavirus page. When I went through and reviewed this guidance, you can already see certain things are out of date. So it's extremely helpful to keep in mind as a baseline, but keep in mind that the IRS is continuing to reevaluate what it can do, and we do expect additional guidance on collection matters to come out shortly. So getting into the details, I'm going to turn it over to Keith to talk about the Notice of Federal Tax Lien.
Okay, thanks, Christine. As Christine said, and as the first part of the slide says, the IRS is not at this time filing the Notice of Federal Tax Lien. So you won't have a problem resulting from the filing of the lien, but you could have problems from liens that are already filed. There could be lots of problems from liens that are already filed. So anything that you want to do with respect to a lien that has been filed is going to create problems for you and for your client, because the people who would work these issues aren't there to work them. So if you wanted to get a withdrawal of the federal tax lien, rescission of the tax lien, a release of the tax lien, if you want to close on a house and get a discharge on the tax lien, all these are things that there's nobody, it doesn't seem like there's someone there at the moment working those issues. In talking to Bridget before the call, if those issues, particularly a discharge of a lien in order to allow a sale to go through of a home, that's something that perhaps if you contacted TAS could find someone within the IRS who is working who might be able to work that issue. But there's no, the normal numbers that you would call in order to make that happen aren't going to happen. And with respect to releases, if your client paid off the full tax liability, the IRS is supposed to release the lien within 30 days. But it's likely that during this period of time that 30-day period will not happen, or the release will not happen within the 30-day period. So you have to be aware that the releases are going to be slow. So just, I guess I'm only giving you bad news about what will happen with respect to liens that have already been filed. It's going to be very hard to get the kind of movement that you want if you're trying to change the status of that lien during this time. Okay, let's go to the next page. Maybe I'll have better news. Well, not really, because I did want to point out with respect to releases or liens or withdrawals of liens, you might be in a collection due process case. So you might be seeking to get a change to the lien status in your collection due process case. And if the IRS has turned down your client, you can go to the tax court to do that. And the tax court is not accepting new cases right now because it's closed. So we put up here the Garnishments case, which came out 4 years ago. which dealt with a day when the tax court was closed. The grounded case got a lot of play in 2019 when the government was closed. But if you are seeking to get to file your CDP case to contest the tax lien, you mail your petition to the tax court during the 30-day period. It'll come back. You'll keep that envelope. You'll mail it in again when the tax court reopens, or you can wait till the very day the tax court reopens. But I would recommend not doing that. I'd recommend mailing something in the meantime so you'd have a record. Withdrawals, you're not going to be able to get a withdrawal. You're not going to be able to get a subordination. I think the Internal Revenue Service faces some issues with respect to refiling of liens. So as the time for refiling comes up, the IRS is supposed to refile lien in order to preserve its position. If it doesn't refile, then the lien will release automatically. So there could be, during this period of time when the IRS is closed, liens that are releasing that the IRS would otherwise have filed a notice of refiling the lien. So if you are representing somebody whose lien is coming to the end of the time period, look carefully to see if there was an automatic release of the lien when the IRS did not refile. So for those people, there might be some good news. And when the IRS lien is released, it has the ability to revoke the release under the right circumstances, but that could, depending on the timing of when it revokes it, change the priority of the federal tax lien. So there are just a lot of issues that will occur here with respect to liens, both unfavorable to the taxpayer and potentially with refiling favorable to the taxpayer. And of course, favorable to the taxpayer that the IRS is not filing liens during this period of time. Okay, the next slide.
Yes, before we move on from liens, you mentioned the collection due process and filing deadlines. Just so everybody is on the same page in the audience, we had a question: if a taxpayer misses a filing deadline, a mailing deadline, because of coronavirus, will there be waivers available? So I assume by your answer that so far the answer is no, especially at least with respect to the statutory deadlines like collection due process appeal deadline.
Well, with collection due process, there's two deadlines. So if you got the notice of federal tax lien, let's say in mid-March or early March, the 30-day period to request a collection due process hearing would have been running. There's nothing in the statute that says that the 30-day period is suspended because the IRS is closed. But if you mail your request in during that time, you even though the IRS doesn't act on it, you would be okay. If you miss let's say that the lien notice giving you the collection due process rights, was mailed to give you a date of April 5th, and you missed April 5th, and here you are today, and you want to request a CDP hearing, but you missed it because of all the difficulties caused by the coronavirus. Then you'd have an argument that the time period should be suspended. The time period for making the CDP request is not jurisdictional. The IRS has the right to waive that time period, and that it should. So with respect to the administrative piece of CDP, the IRS has some control. It hasn't made any announcements yet about it, but it has some control over that. With respect to going to tax court, the tax court has ruled that the 30-day period after you receive your notice of determination at the end of your CDP hearing with appeals, the tax court says that's jurisdictional. That issue is still up in the air. So if you miss the 30-day time period because of the virus, you have an argument that you still should get into tax court. There's some favorable case law and some unfavorable case law, but you can protect your 30-day period by sending the petition to the tax court within that 30-day period, even though it gets bounced back. If you save the envelope where you attempted to file in time, the grounded case and the orders from the tax court following the grounded case will say, yeah, come on in when we reopen and show us that you tried to file on time, and we'll take your case.
Thank you. That's very helpful to keep in mind. So now, levies, garnishments, and seizures. I believe Nancy was going to cover this slide.
Oh, I thought that was still Keith. Okay.
Oh, I'm
sorry about that. I just have offsets on mine. So anyway, what the People's First Initiative says is that there will be no automatic systemic levies issued from April 1st through July 15th, 2020. And that is good for people who are in the queue. But the big question is, how are we going to deal with people whose levies were issued prior to April 1st and whose assets are currently under garnishment in their banks or wherever they are? And we're now in a position where we do not have ACS to call or anyone else really to call at IRS to get these levies released. If something is in field collection and there's a revenue officer assigned, most revenue officers are able to work remotely and have that capacity. So certainly you would want to deal directly with your revenue officer. Just an aside, on all the LITC cases I've been working on during this period, I have had very good luck in any type of issue with cases where I already have a particular individual assigned. Most people are very responsive and they're working their cases. The problem that we have is if you have something that is maybe an old levy that is new to you, that's where you're going to have a problem, because at the present time, there's no place to contact in the IRS to get this an existing levy released. Now, I before this, I feel very bad for Bridget because I feel like all the answers are turning out to be just call TAS, just call TAS. But I do think this is an instance where TAS is more likely to prioritize it and to make sure that we get in touch with someone if we're able to do so, because TAS really is our only outlet right now. I'm hoping optimistically that the IRS will be reopening phone lines sooner than we all hope. I mean, we all have different deadlines in our various states. I'm in Virginia. We're not supposed to be back at work until July 10th. But I do think since the IRS is busily working on getting things going, we hope for practitioner priority service. And that's something where you just want to check that irs.gov every day and see what the status is, because I'm sure that as soon as they're reopened, they're going to let us know as soon as possible. Now, getting back to the CARES Act on offsets, the CARES Act has a very specific provision that says that the economic stimulus payments that are the $1,200 plus $500 per dependent child are not going to be offset to pay prior taxes. This is unprecedented that there would be just such a bold prohibition against a tax offset. They happen in so many other cases. It also says that the only Treasury offset program debt other than child support cannot be offset from the economic stimulus payment, which is referred to, of course, as the rebate on the slides. This created an awful lot of confusion and a lot of talk on all the listservs that I'm on, because there were some public statements made that were confusing and misleading that implied that maybe the IRS would not be doing any offsets during this time, including offsets, normal, regular, routine offsets of 2019 tax refunds. So a lot of us got kind of hopeful that that was what was meant by this provision, but that is not true, because there is no change in the policy on the offsets for normal tax refunds that are due. We were hoping that we would be able to solve this problem. I mean, something that we would normally do for someone in such an economically difficult time is we would go and try to request an offset bypass refund or an OBR. But as we know from Bridget, sadly, TAS is not able to help us right at this moment because there is no one to deal with the service. So how do you deal with this issue? Personally, I am stacking up my needy taxpayers' unfiled tax returns because there is no penalty for filing a refund return late. And I am just recommending to my clients that it's better to get the money 9 months from now than to never get it at all. And I do intend, someday they will be processing them again. I have an open case in TAS right now, and they said basically they are accepting OBR cases. They're not turning anyone away, but it's just, and they will get assigned to someone who will work the case, but they're waiting until they have the opportunity to do so. So even though TAS can't handle them now, I think they can, and they will handle them down the road. This is one of the things they do best. I've had a lot of success in prior years dealing with TAS on this. So I would recommend getting in touch with them, getting yourself in the queue, so that this way, when things start reopening, your taxpayers, especially your low-income taxpayers, are going to be able to get their refunds if they're needy. There was an announcement that basically the criteria would not change insofar that coronavirus alone was not going to be an IRS accepted criteria for getting an OBR. But I think with the way things have gone, it's not going to be very difficult for a taxpayer to show something beyond just the fact that there's coronavirus. For example, everywhere you turn, you hear people applying for unemployment benefits. It is taking a very long time for people to get these benefits. People are starting to fall behind on their rent. I work for legal services, so I'm daily inundated with all the low-income problems that are happening. And fortunately, TAS has also announced that they are not going to be as stringent in requiring the documentation that would normally be required at this time. So if your client, I've always done well with, even with IRS, with getting a sworn statement from your client saying, this is what happened to me, and fax it into TAS. And I think even if the person doesn't get their money immediately or as quickly as they'd like, I think it's worthwhile to still use the OBR option and to go through TAS to do it. I would like to give a shout out to the Department of Education. In my tax clinic, every year I am inundated with calls for people who will get the letter saying that their tax refund was taken to satisfy their past due or their delinquent student loan. I have to tell them over and over, this is not an IRS issue. IRS did not take your refund. They did not hold it back. They issued your refund, but there's this other program called the Treasury Offset Program, and at this point, the taxpayer could not care less, but they just want to know where their refund is. But these are issues that normally have to be resolved through the Department of Education. Prior to the CARES Act and prior to any announcements by the IRS, early in March, the Department of Education said that they would not be doing student loan offsets from tax refunds this year. So we're grateful for that. That is the only TOPS program that has currently announced that they're not doing offsets for the refunds. The rebates are going through no matter what, the taxpayers will get them. But other than the student loan exception that is voluntary on the part of the Department of Education, the refunds are still subject to the other offsets besides child support, such as state taxes and any other government obligations that are owed that can be collected through the TOPS program.
Thank you, Nancy. Keith, was there anything you wanted to add on offsets? And then if you wanted to take the passport slide.
Okay. I would just say on offsets, excuse me, I'm hopeful maybe the IRS will follow the Department of Education, and they have the statute 6402 gives the IRS the authority to waive offsets, and they could do it in a blanket way, or they could do it in a way that would exclude all the people with under 250% of poverty. So I haven't given up hope that the IRS will in making one of the future announcements, announce that they are going to bypass offsets this year. With respect to
Keith, do you think if they do that, then the money that's already been offset, you think they would then go back through all the people who have already filed and been offset, and then issue refunds for those monies, or is that even possible because there's no longer an overpayment for them to do this?
Yeah, I think it would be very hard for them to do that, and I think that probably the unfairness of doing it for people who haven't yet filed versus the people who already filed is probably keeping them from doing it at this point. But so I wouldn't, if they do it, I wouldn't hold out hope that refunds are going to go out to the people who filed before this point. Mm-hmm. But I mean,
well, that is what's happening with the student loan program. You know, it's like there was this deadline where I have a pair of cousins where one person got her refund and one didn't because they filed their tax returns a week apart. And, you know, the one who didn't get it is calling me screaming. And I'm like, well, there's a hard and fast rule. They just said before this date, you don't get it back. And there's not a heck of a lot at this point that can be done because there's no legal right. This was just a program they did on their own.
Right. And I think if the IRS does decide to waive offsets, it will be doing it prospectively and not retroactively. But that, you know, I guess we'll just have to see what happens if they do anything. With respect to seriously delinquent tax debt that can lead to the loss of your passport, should anyone be able to travel anyway, the IRS has said that it's not going to be certifying cases over to the State Department. So that's the good news. I think the bad news is that if your case has already been certified and you are trying to contest the passport revocation, you're going to have trouble because the people at the IRS who you might be dealing with aren't there, and even posting your payment may take a long time, which would cause the system to let you get your passport back. So I think someone whose passport has already been revoked is going to struggle. People who haven't had their passport revoked are getting a pass here for the next few months. So that's the good and the bad news of passport revocations. And private collection agencies, again, somewhat good and bad news. So the IRS has said that it's not going to refer accounts over to the private debt collection agencies at this point for the remainder of the period up until July 15th. But they did not order the private debt collections agencies to stand down with respect to the accounts that were already in their hands. I'm not sure how vigorously the private debt collection agencies are working at this time, but there's nothing that stops them from taking action or making phone calls to try to collect from individuals whose accounts have already been sent to them before the announcement of the People First Act. So again, good and bad news. I think that's all that I have on that.
Yes, so we're going to move on now to collection alternatives, starting with installment agreements. Basically, under the People First initiative, existing installment payments may be suspended. So how this actually works in practice depends on what type of installment agreement you have. What the IRS has said in the People First initiative is that they're not going to hold people to the payments that are due between April 1st and July 15th. However, as we all know, it's not possible right now to call the IRS and tell them what you're doing, that you're not able to pay due to a hardship. So it appears what the IRS will do is essentially not default installment agreements during this period and not look for these payments, even if the taxpayer cannot call the IRS and affirmatively request relief. For direct debit installment agreements, those are automatically taken out of the taxpayer's bank account. Now that will continue to happen automatically unless the taxpayer stops it. So if you can't call the IRS to get it suspended, when ACS comes back online, I would probably recommend calling the IRS and requesting that you perhaps get put into currently not collectible or some other status. But if that's not possible, taxpayers have been advised by the IRS to simply contact their bank and inform the bank that debit payments to the IRS should be suspended. But currently, this relief is only available through July 15th. And so the IRS has informed taxpayers that they need to remember to, if they go through their bank to stop the direct debit payments instead of going through the IRS and arranging some other collection alternative, then the IRS will expect direct debit payments to continue to restart after July 15th. So currently, until July 15th, installment agreements will not be defaulted. But I think taxpayers should be proactive, and as soon as it's possible to get through to IRS collections, I would recommend contacting them to make another arrangement if the current installment agreement is now unaffordable for your taxpayer. The People First initiative had a couple of reminders for taxpayers. It reminded taxpayers that if they have outstanding tax liabilities which are not in any kind of collection alternative with the IRS, that taxpayers can seek an installment agreement or an offer in compromise. Now that was a bit puzzling since there is currently not really a way to do that. Taxpayers can apply online in certain circumstances. However, it's not clear that that can actually be set up without a person on the other end. If your taxpayer qualifies, if they owe less than $50,000 and they want a streamlined installment agreement, I would certainly suggest that they try to do that online. You can also mail in Form 9465 Installment Agreement Request and start sending in payments. So that form is likely not going to be received and processed anytime soon. But again, you would save a copy, save proof of mailing, so if there are any questions down the line as to whether your taxpayer was operating in good faith, then you have that proof. And again, some payments may be being processed. So again, even though ACS is closed, if you have a revenue officer assigned to your case, definitely work with that person. They should be able to modify whatever collection alternatives they set in place or create one if one has not yet been established for your taxpayer. And again, we can try to do what we can. It may not go through at this time. So I'm very happy to hear from Bridget that IRS is working to get ACS back online. And then finally, folks will want to, again, just keep tabs on what's happening with your case and what's happening with IRS collections, and try to resolve things as soon as possible. But definitely keep that July 15th deadline in mind, and look at irs.gov/coronavirus for any extension of that deadline. Larry, did you want to comment a little bit on high dollar cases?
I think you picked it up, Christine. I think the salient point to note is that as the amount of the balance goes up, there may be other concerns beyond the economic indicators, right? Taxpayers might be concerned about evasion of payment charges or allegations by the IRS, especially since the IRS is continuing to pursue high-income taxpayers, quote-unquote high-income taxpayers, and high income might not be as large as the name would suggest by the IRS's standards as anybody that makes or received income of $100,000 or more. So in those situations, those types of taxpayers might want to still make payments in order to show that good faith and avoid the potential evasion of payment charge. And in those situations, I mean, I think you would just advise the taxpayer, presumably a high dollar balance taxpayer, to submit the Form 9465 to request the installment agreement and continue to make payments voluntarily. And essentially the IRS will post them when the IRS can post them. To the extent that you have a taxpayer who has high dollars owed to the IRS and you are seeking a modification, I think it's important that you memorialize it. I think some practitioners tend to be of the inkling that, well, look, you pay what you can pay and you'll deal with it when the IRS computers come back on. And I think there's a lot of truth to that for lower denominated tax liabilities. But as the amount of the liabilities go up, I think you really should be proactive in terms of reaching out to the IRS and memorializing what your taxpayer's intent is. And I think those are the primary considerations in the context. No problem.
So now we're going to talk about offers and compromises, and I'll throw it over to Nancy.
Thank you. The People First initiative came up with a lot of relief for people who are either in the offer and compromise process or who have already had accepted offer and compromises. I think these are very pragmatic solutions, and I do believe they're going to work pretty well. The thing is, there's not a lot of legislation on, or taxpayer rights on offers and compromise. Section 7122 of the Internal Revenue Code just says that the secretary can accept offers and compromise, and most of what we do when we're doing this practice is we're relying upon the manual provisions and all the internal guidance that's issued by IRS. Typically, for people who don't do these regularly, when you first send in an offer and compromise, it's a possibility that it will get returned for some reasons, but usually it's not accepted as far as the substance of the offer, but it is accepted for processing, and that's when you get a letter saying that they hope to get back to you within 90 days. The ideal thing is if you get a letter who has the person who's assigned to the offer, you're going to be in very good shape. The offer processor is usually going to want updated information before any sort of final determination is made once they've reviewed the offer, and it's usually due sometimes within 30 days, sometimes it's within a week, depending on what their deadline is. But at this point, no one will be required to supply additional information when the offer is pending until July 15th, 2020. No matter what the deadline was, a week, 30 days, whatever it is. They will also not close a pending request unless the taxpayer withdraws it or consents to having it closed. And also, offers sometimes are closed because the taxpayer is not in filing compliance, and the IRS is not going to default a pending OIC for a taxpayer who has not filed his, her, or its 2018 and 2019 tax returns by July 15th, 2020. They're they're following that deadline for everything. It looks like the IRS is planning just basically, they're hoping to be fully operational by July 15th or at least close to it, but they're giving the taxpayer the benefit of the doubt and just having that as the outside deadline. At this point, what happens to an accepted offer? Payments have been suspended, both the lump sum payments that you would make with an offer or periodic payments on accepted OICs until July 15th. Normally, when an offer is pending or afterwards, if you're making a monthly payment, you have to make your payment every month. The IRS is going to still be accruing additional interest on the underlying liability, but in an offer situation, that doesn't make much difference because the whole debt is being settled pretty much for one lump sum, and interest is not accruing on the settlement itself. All right. One thing that causes a problem with offers is there is a 5-year compliance period, which means the taxpayer is required to file all returns and make all required payments of tax or estimated payments during the 5-year compliance period. The IRS is loosening that for this period. They are not going to default an accepted offer for someone who hasn't timely filed the return, even by July 15th, and they're going to give them some extra time. And let's see, even though they're requiring, oops, sorry about that, I didn't mean to go forward. So even though they have the July 15th deadline, it's not going to be an immediate default situation. In all honesty, when I have dealt usually with the IRS, after they've put a lot of time and effort into getting an accepted offer, they do have the wiggle room to not be strict on the rules that are in the letter and in the manual. Most people who have worked an offer are very reasonable, even if you missed a deadline and getting something in. If you get in touch with them and let them know what's going on with your taxpayer, they are inherently reasonably in getting things through because they've invested their time and they want to have their work come to fruition. So happily, when you do, the offer unit right now has most of its people able to work remotely, and they are working remotely. If you've already been assigned somebody, you will be able to get in touch with them. I've spoken to several of my people. The one thing that they've said is that they cannot send out any correspondence from their homes. So the way they're working the offers right now is they are very happy if I have the supplemental information and I send everything in, and they've got basically completed offers that as soon as they get back to the office when it reopens, they're going to send out those acceptance letters. So if you have the time on your hands and your taxpayers do have the opportunity to get stuff to you, I wouldn't wait till the July 15th deadline because everything's going to be processed in the queue according to when it's completed. So this is a chance for people with pending offers to at least get their paperwork caught up and get everything sent in so that this way you'll be able to get things moving when the IRS gets moving again.
Great, thank you, Nancy. And now Keith was going to speak to some considerations.
Nancy covered some of those, but there are time frames that you think about when you're considering an offer in compromise. Like if my client is within a year of having the statute of limitations on collections expire, I generally don't counsel the client to file an offer in compromise. The question comes up here, given this extended closure and all the difficulties that the IRS is going to encounter in getting back up to speed. Do you even consider expanding that time frame for advice that you're giving to clients who are beginning to approach the statute of limitations? While the IRS is being very generous and very practical in not collecting during this period, the statute of limitations on collection is continuing to run. So it could be that somebody whose debt is now going to run out in October of 2021 is somebody that you would counsel. You would recommend, or you would consider recommending, that they not file an offer in compromise because the likelihood is the IRS won't collect from them. So that's one of the things you have to consider in any offer is, am I so close to the statute of limitations on collection it's not worth doing? Now you have to add into that how does this event affect your advice with respect to that? Should you submit an offer in compromise during the closure? If you do, will your documents go stale? Will you have to basically recreate much of the offer in compromise by the time the examiner begins to work this? Because if you submit an offer in compromise today, the examiners are probably not going to get to it even for their normal time period. It's going to take them much longer to get to it. So by the time they're looking at it, you might have to redo the offer in compromise. So that's another. While it's nice that you have this breathing space and it's good to work with your clients to get offers, just be prepared that you may have to resubmit documents. What about the taking of refunds? So if you submit an offer today, the IRS takes your refund for the year in which you're submitting the offer, and it also takes the refunds for the year in which it accepts the offer. So it's quite likely offers submitted today may not get accepted until 2021, which means they'll take the 2021 refund in the winter of 2022. So you've got to be preparing your clients for the fact that the delay in offers may delay the time period in which the offer gets accepted, which delays the time period in which the taxpayers can actually receive their refunds following the submission of an offer. So those are things you have to think about. You also may want to think about the 24-month period, which times an offer into acceptance. So if you have an offer that the IRS has been slow to act on, they're going to be much slower to act on it now. It's possible that we will see some 24-month acceptances. That I'm not aware of very many people getting an offer accepted within by having the IRS not process it in 24 months, but I think when you have, the government shutdown last year and now this long period which the IRS is off, it puts a lot of pressure on the IRS, particularly if we see a surge in offers in compromise as a result of the difficulties that all of the taxpayers are going to encounter and all the debts they're going to have as a result of the coronavirus. So the 24-month period could come into play here in ways that it hasn't in the past when we haven't had these extraordinary events causing the IRS offer in compromise office to have such difficulties. It also, the OIC issues and the delay in getting an OIC could impact your decision making on whether to choose between an offer in compromise and a bankruptcy case. Bankruptcy cases can still be filed today. You may be able to get immediate relief or the type of relief that's needed, and your calculus might otherwise have been to do an offer in compromise, but now you might have to think more closely about bankruptcy, and we'll talk a little bit more about bankruptcy in a few minutes. So those are things to think about with offers under this circumstance.
Thanks very much, Keith. So we only have a few minutes remaining until we enter the Q&A period, so perhaps we can go through bankruptcy maybe a little bit faster than we ordinarily would, but please do download the slides so you can see the details. And so I'll turn it over to Nancy.
Okay. I just want to add to what he said about the offers in compromise. During the last year's shutdown, all of my pending offers that were in the queue before it started got accepted before the end of the year, whereas I tended to hold back the offers mostly because I was afraid they were going to get lost in the mailroom, and I mailed them all in after the shutdown. And all those people, their offers have been accepted now, but they all rolled into this year. And no one ever remembers that you told them 17 times that the IRS was going to take next year's refund. They do not remember that, so you'll get these frantic calls. This year I'm going to do it differently. I'm just going to go ahead and send them in and then update them and hope for the best. Basically, the last question that Keith addressed was, what's the difference between your analysis of bankruptcy and offers in compromise? When I go over this with clients, bankruptcy is a certainty. And that is what I always tell them is there are laws, it's right in the statute what your rights are. So you don't have to guess, will the IRS do this? When are they going to process it? So sometimes it's a good alternative because if you know you meet the criteria, you're going to get what you want. So the other big benefit is what we were just talking about. The post-petition refunds cannot be taken to satisfy the pre-petition taxes. So that is a way to protect the refunds. This year, it's going to be a little bit trickier because the only way you can really do a good bankruptcy analysis is by being able to get your hands on the transcripts to make sure that you can do a proper tax discharge analysis. There's a number of criteria that must be met. The tax has to be a certain age. It has to be, the returns have to be filed. There can't be additional assessments. And the only way a bankruptcy practitioner can tell if you've met this is by getting the transcripts from the IRS, and to do otherwise is malpractice. But assuming that you do already have this issue, the analysis, at least if you've gotten the transcripts in advance, you know what you're dealing with. The CARES Act does have a couple of bankruptcy petitions that you can read through. I'm not going to go through they do allow a special small case bankruptcy act to apply to higher debt limits for at least the next year. Those are more streamlined Chapter 11 cases. I work at an LITC. I don't do those and I know we have a lot of pro bono people. They're still complicated cases, and I think right now we're not going to see that many Chapter 11 small bankruptcy cases because everybody's just trying to save their business. This is something that'll probably come up more in the fall. The big issue for consumer debtors is the $1,200 plus or minus rebate payment going to be taken into consideration in their bankruptcy case in two areas. One, is it counted towards their income to determine what type of chapter they can be in and whether or not they satisfy what bankruptcy practitioners call what is known as the means test. And it is in the CARES Act that no, this is not counting as income for pretty much any purpose. It's not a taxable income, and it is not going to be treated as disposable income for determining Chapter 7s or Chapter 13 bankruptcy. The other question that's come up is, will bankruptcy trustees be able to seize these rebate payments as property of the estate and use it for distributions? The Office of United States Trustee has issued a letter to all the practicing trustees. Basically, it doesn't prohibit them from taking this, but it suggests that in most circumstances, it will not be to anyone's benefit for the trustee to take this. There are usually state laws that are going to protect these rebates, and I would say that the U.S. Office of U.S. Trustee is encouraging the bankruptcy trustees to leave those rebate payments alone. There's a couple of reasons why people usually want to use bankruptcy when they're dealing with tax issue. The first one is to get taxes discharged, and the second is to get the automatic stay. When you file a bankruptcy, there is a legal mechanism called the automatic stay for a reason, because it is automatic. It immediately stops all collection action. One of the questions that has come up during the preparation of these materials is what's happening now in IRS when there is a bankruptcy filed and the IRS is listed as a creditor. There was a question I saw that came through the queue about what is the insolvency unit. The insolvency section is a special office in Philadelphia Service Center that gets notice of every single bankruptcy that's filed that has the IRS listed as a creditor. And it is normal practice for most bankruptcy practitioners to put the IRS down as a creditor, whether they're aware of outstanding taxes or not. It's just the notice only thing to make sure that there are no upcoming tax problems. The actions taken in the CARES Act and by the People's First Initiative really amount to what I would consider to be a voluntary automatic stay on almost all the IRS actions that would force people to want to use bankruptcy to get out from under. IRS has to release wage levies and any other levies. There's no enforced collection allowed during the bankruptcy process. But since the IRS is essentially doing this voluntarily, it obviates the need for people to rush into a bankruptcy. I do not think this is going to cause a lot of immediate bankruptcies. To the contrary, since one of the criteria for discharging taxes is the taxes have to be old enough, they have to be at least, most taxes that can possibly be discharged have to be at least 3 years old. So time is on the debtor's side, and what the CARES Act does and what the People's First Initiative does is it's giving the taxpayer additional time to let their taxes age so that when they eventually file bankruptcy, they have a greater likelihood of being able to get rid of more outstanding tax liability. I think the overall goal of both of these programs and the legislation is to keep as many businesses out of bankruptcy as they possibly can, but it is giving taxpayers additional options and at least some breathing room so that this way they don't have to be making any sort of immediate decisions in the middle of trying to pay their employers and go get their SBA loans and all that. They can still take a breath and wait and see how the dust settles before they decide how they're going to have to proceed down the road. I know we're going into the question time. I think I pretty much covered everything that needs to be covered by the slides. And I think Christine might want to take some questions now.
I think we have a couple more minutes for Larry to cover a little bit about collection due process and tax court. And we'll try to weave in some of your questions as we go, as we have been doing.
Yeah, before we switch over to administrative CDP, I just want to note one issue regarding dischargeability of taxes. So for taxpayers that are filing their 2019 tax return, the IRS, we know, is giving them until July 15th to do so under a postponement provision. But for bankruptcy purposes, the IRS has a published revenue ruling, it's Revenue Ruling 2007-59, that says that a tax return filed pursuant to or within the time under a postponement provision, like in response to COVID or under Section 7508 Cap A, is still going to be considered to be a late filed tax return for purposes of the 1-day late rule. And most of you know that a tax return filed or taxes due in connection with the tax return filed even 1 day late are generally not dischargeable in bankruptcy. That's the rule in, I think, 3 different circuits. The 11th Circuit is an outlier. So it's important to keep in mind that if you are trying to preserve the potential dischargeability of 2019 taxes, you will want to file an extension request for your client by April 15th. Otherwise, the IRS, at least under its existing administrative guidance, should take the position that return is late filed. The ABA expects to submit additional comments to the IRS and raise this point for them. I do not know if relief will be granted, but the April 15th deadline is coming up, so please keep that in mind. Concerning administrative CDP, I'll try and be really fast. Most administrative CDP should stop as a result of the IRS's suspension of issuing notices of federal tax lien and final levy notices. I think we're going to see administrative CDP proceed for existing cases, also for so-called high-income taxpayers and final collection notices, which may have been issued prior to April 1st. It's important to keep in mind, I think, a couple of things. First, the statutory 30-day deadlines all still apply, notwithstanding any suspension that the IRS has given so far. The ABA has requested additional suspensions, but no response has yet been received from the IRS. Notwithstanding the IRS's general suspension and the ABA's request, taxpayers, in addition to filing timely, should also keep proof of mailing, timely mailing, in preserving all CDP appeal rights. Even if a settlement officer or an appeals officer treats the request as untimely, practitioners should still proceed as if they have a collection due process proceeding, and when they receive that final decision letter, then file a tax court petition to argue that the original administrative collection due process request was timely filed. It's really important, I think, that we memorialize every single interaction we have with settlement officers. That's a best practice generally, but I think it's even more important now as requests for adjournments of CDP proceedings are being made. It's also important, I think, to supplement our administrative requests, right? Many times we file the Form 12153, 6-12 months go by before we finally get assigned a hearing. Right now, during that 6 to 12 month period, or if it's longer, I think there's going to be a lot of changes financially for taxpayers, and it's important that you adapt your proposal to the IRS to account for those changed circumstances. Also, when you're submitting a Form 12153 to the IRS, I think it's important to preserve all of your collection alternatives. So even if right now all you think your taxpayer qualifies for is an installment agreement, it's also important to preserve the potential for currently not collectible status for an offer in compromise. Certainly, as Keith mentioned, we should expect to see a surge in OICs as a result of COVID. When appeals officers are requesting financial statements or compliance checks, I think it's really important that we push back again on these appeals officers and that we preserve the potential for changed circumstances at some later point to support a later motion to remand in tax court. CDP hearings should be being pushed forward. As we mentioned earlier on, there are methods by which face-to-face conferences can be preserved. We can go on to the next slide. Notices of determination being issued. The ABA section of taxation recommended that all notices of determination be suspended. If the IRS is taking unreasonable positions, this is important at any point in the collection phase, and I think at this point we can then switch over to Q&A. But if the IRS is taking unreasonable positions in any collection case, the IRS can be held liable for damages under Section 7433 in a court action, or under Section 7430 for administrative costs or reasonable litigation costs. It's really important that if the IRS is not doing what it should, be doing, okay, and I understand that times are tough and the courts may go the other way and say that the IRS was acting reasonable given the circumstances. But if the IRS is not doing what it should be doing, it should absolutely be advising our clients of their right to potential damages under Section 7433 and 7430. We didn't have the opportunity to go into depth collection review proceedings before the tax court. I suggest that you download the slides and take a look at the materials because it contains a lot of good additional information you should be aware of.
Great, thanks very much, Larry. So now we'll move into the Q&A portion. We have some questions about offers in compromise, which I'll throw to either Keith or Nancy. So Keith had mentioned that you may have an offer that ages into acceptance if the IRS is inundated with offers and the statutory 24-month period runs. We had a question of when does the 24-month period begin? Does it begin when the taxpayer mails their OIC to the to the offer unit, or does it begin when the IRS actually starts opening up that mail and stamping it as processable?
Well, that's a good question. I wish I could answer it.
I'm pretty sure it begins from the time once it has passed the initial review in the OIC unit, because it's just a piece of paper. Until then, it's like I think it's counted from they put a date on a letter saying now we're going to start processing your offer and we'll get back to you in 90 days. But under the IRM, I mean that's what the services position is going to be.
Yeah, I totally agree. That's the services position.
Right.
No one has ever litigated to my knowledge, when the 24-month period begins. So I don't know if you have if you mailed it in today, and you could prove that it got to them at a certain date, because you mailed it by certified mail, whether you could argue, 24 months from next week. If they still hadn't worked on it, whether it's aged into acceptance. But the IRS, I think, will treat it as Nancy says they would treat it, which could mean that they don't even treat it. They don't even treat it as being accepted until sometime in July or August or September.
Right.
I think the 24.
So that's why I think certified mailing is crucial.
Right, and also it doesn't begin to run until the offer is processable. So it's important to make sure that you comply with all the specific terms of the offer, including any payment obligations that you're proposing.
Along those lines, speaking of payment obligations and OICs, Nancy reviewed that OIC payments right now are suspended. We talked about offers that are pending and offers that are accepted. We had a question about an offer that had been rejected and the appeal of that rejection is pending, and the question was whether continuing payments, periodic payments, are required during that appeal.
I don't believe they are, because it's a rejected offer, and once it's rejected, your obligation to make those payments is gone. I mean, what I advise my clients to do, I would say escrow those payments to be on the safe side. But when you send that money in, chances are you'll never see it again, or it will take forever to get back, because I know OIC appeals take an extremely long time. I don't think they're very high priority.
Thank you.
But once there's that offer is closed for all, and does not require further payments.
Keith, on the question of liens, you had mentioned that the notice of federal tax lien may be self-releasing. Could you tell people, if they're not familiar, where to find the lien release date?
Well, it'll be in the lien itself. It'll tell you when the lien will self-release. So that the self-releasing lien has the language in the lien document itself. So that's where you would look to see what the date upon which the lien would release.
Right. So hopefully your client has a copy, or you have a copy of the notice of federal tax lien. Again, we can keep trying to call the lien unit, and I'm not sure if they're answering their phones right now. But normally,
but you can always go to the local courthouse, and it's filed in land records or whatever they call it wherever you live. But that's a public record. You can get it pretty easily.
Assuming you could get into the local courthouse is another issue, but yes, that's where you could check it.
Great. So we talked a little bit about the difficulty of getting transcripts, and there was a question about getting transcripts since it's currently not possible to send in 2848s. We don't know yet when we will be able to send them to the CAF unit again. There is some limited ability for a taxpayer to request their account transcripts online. And so I would suggest that your taxpayer try that if you have a need for transcripts, and they're within the types of transcripts that the IRS can provide to taxpayers online. So moving on, there was another question about statute of limitation. So we talked about certain statutory deadlines, if they're jurisdictional, have not been suspended by Congress. There was a question for somebody who needs to file an amended return with a refund claim. We mentioned amended returns are not currently being opened or processed, and the audience member stated that the statute of limitations, or the statute of limitations to make the refund claim, is coming up, and wondered if we had advice for that situation.
The person should file a claim.
Yeah, get it filed before the due date and mail it certified. I mail everything certified because it'll still get delivered. But that is certified mail is still proof of mailing, which is what you need.
Right, and the ABA has requested that the IRS extend the time within which to file administrative claims for refunds. The IRS has not responded to those comments, to my knowledge, as of yet.
Right, so you'd probably want to get proof of delivery, if you could, of that claim.
And I would also say, this is Bridget, make sure you keep a copy with the signatures on there should we reach a point that we can accept those electronically and assist in processing them that way.
There's a question about, for taxpayers who are currently experiencing hardship and can't reach anybody at the IRS to explain their hardship, how can people plan for future reasonable cause requests that may need to be made?
Yeah, I think a good way to do it would be to document the efforts that the taxpayer is making to act as a reasonably prudent person. So if there are medical circumstances, get copies of the medical records. If there are medical concerns, even though maybe not medical records, for example, I know a lot of people are FaceTiming with doctors in order to evaluate symptoms. Keep records and contemporaneous documentation of that. If there are other attempts to reach out to the IRS, there's no mechanism by which those attempts can be recorded by the IRS because there's no one at the IRS to record them in an ICS transcript, for example. Keep contemporaneous documents as you go. Those would all be presumably admissible in a later court proceeding as present sense impressions, and you can go from there.
Kind of piggybacking on what Larry said and going back to the amended return question, And for people experiencing, a severe medical problem as a result of this, who are facing an amended return deadline, they might want to keep in mind 6511H. If they are financially disabled and unable, and that's what causes them to miss the amended return deadline.
Great. Let's see. We have 1 minute remaining. Final question. If people are receiving collection notices, a commenter says their clients are still receiving some collection notices, such as a CP 504. How do you suggest that people respond right now?
Yeah, so I have clients that are also receiving some of the automated collection notices. I think it depends. I mean, first off, the 504 isn't a final notice that will confer collection due process rights, even though the letter would suggest to the contrary. If you feel compelled to respond to the IRS, certainly write your response to the CP 504. But I think you should keep in mind that the CP 504 would be the last step before a final notice is issued. You should take stock and advantage of the IRS's delay right now and kind of get all of your taxpayers' ducks in a row, get the documentation in order, start thinking about collection alternatives and what you would propose in response to a collection due process proceeding. And if you are at the point when you can propose a collection alternative, then you can certainly do that in response to the CP 504. If you want appeals review, you can file a Form 9423 to request a CAP hearing. Sometimes many practitioners will file both the 12153 and the 9423, given the language that's in the 504. But as a practical matter, the IRS will only process the 9423. I think it's important to keep in mind that under 3 recent cases, Our Country Home Enterprises, IAMS out of the 4th Circuit, and one other case, that request of filing the Form 9423 and the administrative hearing might preclude the taxpayer in a later proceeding from challenging the existence or the amount of the underlying deficiency. So for example, in a penalty and interest abatement request situation, you might not want to file the Form 9423 because doing so might preclude the ability to raise that issue de novo in a tax court proceeding.
Right. So practitioners. So we're out of time for the program. That's all we have now. I would just say on that point that practitioners should keep in mind which IRS notices and which deadlines have some legal effect and which don't. As Larry noted, the CP 504 deadline does not really mean anything, but you want to know where you are in the notice stream and keep an eye out for this actual CDP notice that does make a difference to your legal rights. But I want to thank our panelists very much. And before we leave, I ask all attendees who want CLE credit to stay connected for instructions to get your CLE certificate. Also, please wait for the evaluation to come up on our screen. So finally, to our faculty, Larry Santacandro, Keith Fogg, Bridget Roberts, and Nancy Ryan, thank you so much for sharing your expertise with us. On behalf of the ABA Tax Section, I'm Christine Spidell. Thank you all for joining us. I'll now turn you over to our operator for some additional information.
Thank you. On behalf of the American Bar Association, the ABA Taxation Section, thank you for participating in this program. To learn more about the sponsors, visit the ABA website at www.americanbar.org. Thank you, and please click on the evaluation link. We value your feedback.